Welcome to Market Technical Analysis by InTheMoneyStocks.com for October 30th, 2007. Just having a little fun here today with the final countdown leading up to the Fed. And that's really the name of the game today. And any way you cut it, all eyes are on tomorrow. We had consumer confidence today at 10 o'clock, 10 a.m. this morning on the East Coast. No big deal. You know why? Because the Fed is tomorrow at 2:15 p.m. Eastern Time, and that's where all eyes will be. So again, today we're going to go over a few odds and ends on the charts and just look at various technical patterns. But when it all comes to get down to it, tomorrow at 2:15, the market will erupt in volume, and the price of the market or the indices will move one way or another. I don't know which way, and there are small indicators that might be able to tell us. But overall, it's important to realize that this move is going to be ginormous. All right. So let's get right into it here. And again, the final countdown was playing as we started this lesson today, or this video. And it's always fun to kind of play around, get a little bit more into it with the Fed tomorrow, because let's face it, this is what it's all coming down to. The Fed meeting on Halloween, and that could be a little interesting to say the least. The fact that that meeting is coming on Halloween, and we'll see. October 31st, 2:15 p.m. Eastern Time will be the decision. And looking at today's market, we saw some interesting moves today. Now, it was all light volume, and that was expected. Ever since the open in the chat room, which I do encourage everyone to come and join, I said, keep in mind, this is probably going to be a relatively flat day on light volume. And light volume somewhat favors the upside, and that's important to realize. But at the same time, the last two Fed meetings, we've had giant rallies. And I do think that there are going to be individuals out there that are curious and possibly looking to take some profits. It's always better if you're up, especially those that have been holding stocks for quite some time, might as well take a little bit of a little exit here in regards to profits just to be safe, because you never know with the Fed. The Fed, we could get a rate decision that the market likes, and we could shoot up huge like we did the last two times, or we could see the rates, maybe it's not as good of a cut, or maybe we don't see a cut like the market's expecting, or maybe the vocabulary, the wording that the Fed uses is not as bullish or bearish as the market's anticipating. It's all about reaction here. All right, we've pretty much locked in a quarter basis point cut in rates. All right, and it's all about whether or not they do the discount rate along with it. Do they say that we are going to do more maybe in the future, or do they warn against inflation pressures now? And all the fine-tuning of the wording is so key, and that's why if you guys watch CNBC, you see them going over that document where the Fed makes their rate cut decision with a fine-tooth comb, because anything that they say, one word, an and instead of a but instead of a they, could be a huge impact to this market. So that is the basics of it, guys. And today, this is what we had. Light volume, ES contracts. We did basically 1 million contracts, which is extremely light. And you can see we had volume at the end of the day and volume at the beginning of the day. And we had a choppy trading market. All right, for the most part, we paid attention to the 200 moving average most of all, and the biggest thing I can point out right here is this right here. There's the 200 moving average, and you can see it coming right along here, and that's where we topped out today. And we did top out there nicely. You can see 3-4 times here, it tried to push up, and it could not. And that was the key right there. Then we started to move down, and in the end of the day was very interesting because we saw a little selling pressure. And the selling pressure took us down actually negative on the NASDAQ here and on many of the indexes. And that's going to be key to note here, folks. In addition, we also see some odds and ends here with in regards to other moving averages. And it's nothing major, but you can see how it followed. The tops kind of followed the 20 moving average here. We did push above here, but we fell right away, pushed back to here. Again, the 20 moving average fell again. And again, this is a clear trend line. And those of you that like to do the trend line drawing on your charts, you basically take the high right there, and you can trace it all the way back down here. And you can see how basically if you draw this correctly, there's no close above this pink trend line. All right, you have a top here, then it tries to get above 3 times, does not, tries again here, 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 one more time here, again here. Then the key here is, folks, when it finally closes above, you get this close right here above, that's when the little rally this afternoon started all the way up to that 200 moving average. All right, and again, the 200 is major resistance. You see a nice little short play right there, and really you could have just held short all the way down to here. We did have another bounce up off the 20 and the 50 necktie right here. And again, a necktie is where you have two moving averages that are crossing, and you see the cross right there, the 20 and the 50 crossing. The market tries to sell there, bounces up a few times. Finally, it bounces up here, and at this point, there's no longer a necktie. It's two moving averages separated. The selling ensues, and you see a nice drop. Now, again, note the volume at the end of the day on that sell. Now, volume overall was very light, but we did see a little extra volume on the sell side. Again, and I say this always, I have no clue what the market will react to tomorrow on the Fed. I do not know. And anyone that tells you that they know for sure is BSing you. So keep that in mind, folks. We could see a hard sell. We could see a hard buy. We could see a flat market afterwards. It might fluctuate both ways. Now, I tend to think we'll have a move one way or the other. I just don't know which way. Now, looking at the charts, all in all, this is a very interesting thing because we had the ES touching yesterday the 20 moving average. And today we actually closed a little lower on that ES. We closed down here. So we actually bounced off and went back down. Now again, and this is I've said in multiple videos here, you have the 50 moving average here and the 20 moving average here. These are converging. Alright, it's going to get smaller and smaller as we go out. At one point you're going to have a close below or a close above. Depending on which way it closes, that way you can play the market possibly, okay? So again, that's a possibility. But again, I always say consult your financial advisor. This is just my humble opinion, and I just throw stuff out there. Don't believe a word I say. Go with your financial advisor. All right? All in all, folks, this is an interesting market, and I can't wait till the Fed comes out, and I can't wait to see the future economic data showing up here in the market because it's just going to be, we're all going to be on the edge of our seats in that chat room tomorrow when this comes out. The other thing I just want to point out here is that you saw some hard selling right here with volume, but again, note the volume on this little bit of up move. All right? This little bit of an up move, very light volume. That's usually a bearish sign. I always like to see heavier volume on the upside if we're thinking the market's going to go up. So in many ways, I'm slightly biased to the downside, but it would be ludicrous to try and short a market ahead of the Fed or go long a market, in my opinion. And again, it's just my opinion, but as a trader, it's our responsibility to limit risk. And you can't tell me that there's no risk involved when you go long or short a market before the Fed. That's just insane. And yeah, you can take a shot, but you know what? You can also go to a casino in Vegas and take a shot there. You know, that's the basics of it, in my opinion. So in any case, we're going to look at the NASDAQ now, and we're going to look at the daily NASDAQ. Now, the NASDAQ has been a lot stronger. Although last week when we had some down days, we did see the NASDAQ weaker than the other indexes too. So it seems like on the positive days, the NASDAQ's stronger, but on the weaker days, it's actually getting hit now. So we could be seeing a weakening of the NASDAQ, and the tech has been on an ultimate rally. Look at this move up. You can't find a better rally in the market than that over the course of 2 months. Now, what's the key here? Well, again, we're hovering right above the 20 moving average. This yellow line is the 20 moving average. Should we close below again? Then you look for a move down. Should we take out, and then again, we have a possible double top formation here, and that should be watched. You have a double top here. And should we close above that double top, then maybe we see a move up. But again, it's a triangle formation here that these lines are going to come closer and closer together. And at some point, the market will push. You'll see a close on a candle here on a daily chart above or below, and at that point you can make the decision, well, what's more likely here, a fall or a move up? Okay, looking at a couple things intraday here on the NASDAQ, you can see for the most part the NASDAQ stayed in a tight range on light volume again, right here, and we did sell off into the close again on the NASDAQ, and the NASDAQ actually closed slightly negative. Now, what the big thing is here in regards to the markets, and again, the Dow closed down about 78 points, the NASDAQ closed just slightly negative by 0.73, and the S&P closed down 10. But the big mover today was oil, USO. All in all, USO got crushed today, down $3. Oil was down about $3.50, give or take, today, and that is a large move for oil. Now, the reason why I'm not that surprised, and yes, we are approaching $100, and yes, we could see a spike up, and we very well likely will see a push up to 100 at some point in the near future, but you've had such a move up in oil that you just have to take a breather. In addition, you have a lot of profit taking ahead of the Fed in oil too, and that's going to cause a dump out in oil because people are saying, well, what if the Fed comes out and says something that buoys the dollar positive? All right, now the dollar is one of the main reasons, aside from geopolitical risk, that oil has been rising so much. The dollar is getting hit, and in tune, oil is traded in dollars, just like gold is. Those commodities have to rise if the dollar is weakening. It's just the way it is. They go inverse to each other. Now, if the Fed comes out tomorrow and says, hey guys, we're a little worried about inflation, we're going to cut a quarter point today, but at the same time we're not necessarily seeing anything in the future, well, guess what? The dollar most likely will rally, oil will drop, and so forth. And so that's what people are thinking. Now, who knows if the Fed does that? But if you're in the profit on $10 in oil right now, it's trading at $89, and you bought it at $80, and it was up to 92, 93, 94 in the recent last couple days. You're going to say to yourself, what's the smart thing to do? Take some profits ahead of the Fed. Why would you risk it? So in any case, that could be what we're seeing here too, profit taking in that. Also, the GLD, another little pull down here, and that's the same thing we're seeing in gold. Maybe not to the same extent as the USO, and the USO daily, you see a real ugly candle there. But on the GLD, the same thing. Now, we could see a reversal. If the Fed comes out tomorrow and says, we're going to see a big reversal, then you could see oil move back up.